What's up, everybody? I'm JD, and if you want to learn how to trade Forex or futures in 2025, this is the place to be. Alright? This is the only video you're going to need. I'm going to break it all down from scratch, from what a pip, a tick is, how leverage works, how trends work, what bulls and bears are, how they shape the market, how to place your first trade, what brokers are, how I personally trade using SMC, which is Smart Money Concepts. So let's build a skill, guys. No hype here, no Lambo. Simply just really how to get started. And I need you guys to understand first and foremost that this is not a get rich scheme. Trust me, you are in it for the long haul if you want to get successful at this, but it can be very, very rewarding as there is no ceiling to this. So you can compound it as much as you'd like. So what is trading? Okay, trading is predicting if price is going to go up or down. You're not buying the product, you're just trading the price movement. Okay, by predicting, I mean you're kind of betting and that price will either go up or go down, whether you buy or you sell. If you sell the market, you are betting that it's going down. If you buy the market, then you're betting that it's going up. Now, the way I personally trade is not about anticipating or about trying to predict. It's more about reacting to what the market's already showing you. So it's not actually like it's not gambling, right? Like a lot of people say. It's making informative decisions. Okay, so I'm going to start by explaining to you guys what it is that we are trading in. You can either trade Forex or you can trade futures or crypto, where you can trade crypto future. We'll get into that later. But I personally specialize in Forex, which is the foreign exchange, and futures. Okay, so I'll explain those right now. Forex is pretty much you trade one currency against another. So the EUR USD is the euro versus the dollar, also called Euro USD. You buy the Euro USD if you think the euro is going to go up. You sell it if you think the USD is going to go down. Um, or you sell it if you think the USD is going to go up. Sorry about that. And then the USD JPY is the same thing, but if you think USD versus the yen, and the forex market is open 24 hours a day, 5 days a week. Okay. Futures, on the other hand, are contracts that tracks assets like the Nasdaq, the S&P, gold, and all that stuff. Okay, you can buy slash sell them before they expire. It's more centralized, good volume data. It's regulated, and futures are pretty much just a contract. Okay, so you are saying that you are willing to buy this asset at a later price. So if you buy, let's say, a futures contract for $100 and it's worth $110 in 2 hours, you've made $10 on the contract, right? Whereas if you sell for $100 and it's $90 in an hour, then you've made again $10. Why? Because you are selling it for $100, but it's worth $90. Okay, if that makes any sense. So here I'm on TradingView. Okay, I'm on TradingView Super Charts. Okay, you go here, Euro USD. Let's say, bang, right there. You have the Euro USD charts with all your time frames here. On the top left, you can't see because my face is there, but pretty much all your time frames are there. 1 minute, 5 minute, 15 minute. And then let's say you wanted to trade the Nasdaq, right? You just type NQ. It bring you straight to it. There you go. Now I'm on NQ. Okay. You can look at this. It's important to understand this. I have video on this. I have an ebook, also a free ebook that's out right now in my Discord for this, so you can check that out. But I will not go into this right now. Instead, what I'm going to do is I'm going to tell you guys what the key to trading terms are. We're going to start with the very basic, okay? So one pip, a pip, PIP, okay, is the smallest possible move in a currency pair in Forex, okay? So 1 pip of Euro USD is 0.0001. So if the price of Euro USD is 1.1000 and it goes to 1.1001, it's gone up by 1 pip, okay? The JPY pairs are different though. They're the only ones that are different. It's 1 pip for 0.01 because there's only two decimals in JPY pairs. Okay, so if your price is 137.80 and you go for and it goes to 137.81, you went up by 1 pip. So here, if you can see, I'm going to go on Euro USD. The price is at 1.12836. So if it goes to 1.1284, that's 1 pip. Whereas if I was to go on JBP JPY, let's say, you can see it's 193.040 here, the price. if it goes to 193.05, you're just gonna buy a 1 pip. Okay. Now, that being said, I'll now explain the ticks, which is the futures equivalent to a pip. It's the smallest price move possible in a futures contract. For example, in the Nasdaq or US 100, a 0.25 tick is worth $5. Okay. Leverage on the other hand. Wait, actually, you know what? Let me go. Where the fuck? Okay. Okay. These are my real actual trading charts. So here you can see that right now this is 300 tick. The number on the left of the blue square is the ticks. So this right here is 1 tick. It's super, super, super small, okay? Leverage is how you can boost the amount of money you have in your account, if you will. It's not really that. That's not what it does. I'll explain it. It lets you control a large trade with very small capital. So let's say a 1 to 100 leverage. Okay, it means if you put $100 in the trade, you control $10,000. Okay. Now, while that sounds great for gains, it also means you lose all your $100 very, very quickly. Okay. If I was to try to explain it as simply as possible, it would mean that let's say you put $100 into the trade and you can now control $10,000 with a 100x, okay? If your trade goes down 1%, you're done. You just blew the whole $100 that you just put in, okay? You are not gonna be actually controlling $10,000. You only own $100. It lets you be able to apply for or engage in bigger positions, okay? So that being said, now I'm going to explain to you guys what a bull market is, what a bear market is, what trends are. A bull market is when price is trending up. It's when there's optimism in the market. It's when people are bullish on the asset, which means they think price will be going up in future terms. Okay, you could be bullish on the 15 minute, but you could be bearish overall. Bearish is the opposite of bullish. Bearish is when price trends down. It's when there's pessimism in the market. It's when the market is pretty much in an overall bear trend, which means it's going down. Okay, so you could be bearish on the daily, which means um, you think that tomorrow price will be lower than today, but on the 15-minute you expect price to move up before going down. Okay, I don't know if you guys, this is a little more advanced now, but I'm just spitballing here. I'm just like putting it out there for you guys to understand. You can rewatch this video if there's any confusion. You could always hit me up with questions too. I always answer. My Discord is free. I have a free ebook again. So if you guys want to join that, you're welcome. I explain everything in there. I answer all the questions. Now, the trends guide your bias. A bias is where you think the market is going to go. What's your bias? Are you bullish or are you bearish? Okay. Now that's your bias, all right? Smart money traders use structure, not hope, okay? We have our bias, we have our trend, we have where we think the market is going to go, and we have confirmations that prove our theory, and that's how we enter trades, okay? Now, how to get started with trading, okay? You need to choose a market. Are you more familiar in Forex? Do you want to trade futures, okay? Or crypto, but I don't recommend crypto for beginners at all. It's way more volatile, way more crazy. You want to trade Euro USD, stable, beginner-friendly pair. You want to trade Nasdaq, which is cleaner in general, in my opinion, okay? Now, once you've chosen your market and your pair that you're trading, a lot of beginners make the mistake of trading 1,000 different pairs. Choose one pair and master it. Okay, choose one market, master it. You want to trade Forex? Good, do it. Trade Euro USD, trade JBP USD, trade JBP GPOI, trade USD GPOI. Trade whatever asset or currency you want. You could DM me if you're confused, but pick one and stick with it. Okay. Or you go for futures where you could trade ES, which is the S&P 500. You could trade the US 100, which is the Nasdaq, or you could trade US 30, which is the Dow Jones, or you could trade gold. You could trade gold in Forex as well. Really, the choices are endless, but they are yours, and you have to make them. Okay. Once that's decided, okay, you have to choose a charting platform. I recommend TradingView. You can use it for free. I pay for it to have more features, but you can use it for free. It's clean. There's markups. It's good. It reacts well. There are better ones out there, most likely. I do not care. I like TradingView. This is what I trade on, okay? You can use CTrader. There's NinjaTrader. There's MetaTrader 4, MetaTrader 5 for executions. People chart on that too, but I don't really like it. For Forex traders, if you've chosen Forex, you could execute on MetaTrader 4 or 5 or TradingView. Currently I trade Forex on TradingView, okay? So you need to pick your execution platform and get comfortable with it as well, okay? If it's MetaTrader 4 or 5, it's going to be on your phone. If it's TradingView, it can be on your phone, it can be on the computer, whatever you want. You could chart on TradingView and then enter on MetaTrader 4. This is very important. That means that you could chart everything you want on the computer on your TradingView, but if you're more comfortable entering on your phone and have it on the go, you can do that too. So you could chart your stuff on TradingView and then you pull out your phone when your entry is set and everything. You set your limit on the phone or your market order. A limit order is when you say price will, let's say, okay, let's say I wanted to put a limit order here, okay, because I don't want to actually get tapped in, right? I'm not currently logged into anything, but you would go here for this, okay? And a limit order is going to put an order where you decide. So let's say this white line, I want to sell. So when price goes to my line, okay, it will trigger my sell order. This is a limit order, okay? A market order is when you're entering at the price that it currently is at. If you press market order, you're instantly in the trade. If you press limit order, you're going to be waiting for price to go to your limit order before getting into the trade, okay? You could put a sell limit, which is when price touches your entry or your sell limit is going to sell. You could put a buy limit, which when the price touches your buy limit is going to buy, or you could sell market, buy market, which is going to instantly execute your trade on the buy side or on the sell side. Okay. That being said, once that's done, you need to learn the smart money concept tools if that's what you want, or you could learn SNR, which is support and resistance. You could learn supply and demand. You could learn whatever you want. Okay. What's important with smart money concept, you need to look into liquidity pools, market structure shifts, fair value gaps, displacement, optimal trade entry, all that good stuff. I have videos, plenty of them on my channel. You can look at them up. You can look at my Smart Money Academy. Everything's there. Okay? And then you need to start building your trading plan, which I also teach at the end of my Smart Money Academy. But more or less, it's when you're going to trade, what you're going to trade, what's your risk, what's your max losses, what are your parameters to enter a trade, and all that. Okay? Now I'm going to explain to you very quickly what a candle is because I'm just now realizing that some people might not know what it is, okay? So this right here is a candle that I've just drawn. Now, if this was a bullish candle, I'm gonna put both, okay? Here. Now, the one on the left is a bullish candle here, and the one on the right here is a bearish candle. What that means is that if this candle is bullish, the open price is at the bottom here. Price went here because if the wick is where price went, but not where it closed, okay? So price went here, went back up, went back down, and it closed here. So it opened here and it closed here, but it went all through this, okay? Bearish means it opened at the top and it closed at the bottom, same thing, okay? So if you look at candles printing in real time, I'm gonna go on the 15-second here so you can see candles right here, okay? This candle opened here, went here, and now it's currently going up. And where is it going to close? It closed right there. Now this one opened here. It went here. Now it's going up. Now it's going down. Now it's back here. Okay, you guys can see that. When we zoom back in further, now it's down here, this candle. Now it's here. Will it close here? It closed there. Okay, so you guys understand the point. Now this one opened here. It went here. Now it's here. Now it's here. Okay? So pretty much that's what it is. Okay, that's what a candle is. If you guys need more information on candles, just DM me or join the Discord. I'll explain everything. So yeah. That being said, the types of trading style. You guys need to pick which type of trading you want to do. Do you want to scalp, which means you're in and out in seconds or minutes? It's high frequency, small targets. The pros for this is there's a lot of opportunities. The cons is it's a lot more stressful. It's easier to overtrade. Okay. You want a day trade, which is trade opened and closed within the same day. It's common with US 100, Nasdaq, and Euro USD intraday traders. The pros is it's clean. It's usually session move. It's less emotionally intense. It's what I do. Okay. I used to scalp. I couldn't do it anymore. I don't like it. Or you could swing trades, which means your trades last days to weeks. You're based more on the 4 hour and daily time frame. You have bigger targets. You're less often on your screen. It's good for people with big capital, people that don't really want to worry too much about it. You want to have like a part-time job type of thing. You could Leave the trade overnight, but there's always the risk of overnight and weekend trading. Okay, so that being said, guys, there's also position trading. You guys know what that is. That's the HODL lifestyle. That's when you long-term trade for weeks or for months. It's more focused on the fundamentals, the technicals. The pros is it's very passive, minimal time commitment. The cons is it's very slow feedback, so wider stops. So yeah, sorry, I'm a little sick. Once you guys have all this figured out, you need to figure out your risk management. This is the most important part of trading. This is where the 1% is chosen, okay? Because 99% of traders fail. Never risk more than 1 2% per trade, okay? Use stop losses, and I'm fucking saying this like really, really intensely because we've all made the mistake of saying no stop losses, no losses, right? But that's not how it works. You just blow your account, okay? After 1 hour, you want to go break even, or after your trade's been proven right, you want to secure this trade, okay? You want to take profit, that's fine. You want to put your stop break even, which means you put your stop at your entry so the trade is now risk free. Even if it goes back, you're just making nothing on the trade. You guys need to figure out your risk management technique, okay? Respect your plan. Do not overtrade. I'm saying this very, very slowly. This needs to be ingrained into you. Do not overtrade. Don't over leverage. Don't over risk. Use stop losses and treat your trades like a job, okay? Risk management is how you stay in the game long enough to improve, guys. It's super important. It's ridiculous how important this is. Once you have all of these information, and I'm throwing a lot of information your way, I know, and I'm sorry. Once you have all of those, you're ready to place your first trade. Please do so in demo. Trade demo until you've proven to understand a bunch of these concepts. And once you've understood all these concepts, you can place your first trade in demo. You might want to switch to proper training after. I'll explain that in another video. So start on demo. Example, pick your market. You have US 100. You have your setup. You have how you want to trade. You have your parameters to enter a trade. Make sure you understand those. Get in the trade, and then look how price reacts. Okay. Once this is all done, guys, you guys need to have your mindset, your drilling, and your discipline on point. Trading is a skill. It's like boxing or surgery or whatever. You need to practice it to get better. You're not going to start off being the best. You need to journal every single trade. What did you see? Did you follow your plan? What could you improve? What has improved? Pictures, dates, everything you can put and think of, you do it. Okay? After that, what are the next step? What are the resources that you have? You can watch my Smart Money Academy. You can get my ebook. You can join my Discord. You can study structures, candles, fair value gas market structure shifts. Go on FX Replay, create an account, backtest. Backtesting means you go back in time and you trade your fake with fake money. You trade your setup pretty much, and you just try to see how much you could win with it. And yeah, after that you move on to prop firm trading or real money trading. But start on demo. I think it's important for beginners, and then we'll see what happens from there. If this helped you, hit like and subscribe. Drop a comment if you're getting started. This is the complete roadmap right here. Let's build real scale in 2025, guys. No hype, just discipline and smart execution. Hit me up if you have any questions. Other than that, you can follow me on TikTok and Instagram. Join my Discord again, and I'll catch you guys in the next one. Peace.